All right, everybody, we're going to get started now. It is 6:30. This is the GWII Investment Institute show live with Rodney Lake. Today is January 20th, and it's 6:30 Eastern. Let's get going here. January 20th, 2022, just to be sure here. So a little disclaimer up front. This program will be recorded, so we are recording this, just FYI. We plan to post this recording online. So just be sure to know that. We will not use names of the audience members to protect any privacy. My name is Rodney Lake. For those of you who don't know me, I serve as Vice Dean for undergraduate programs at the GWII School of Business. I'm also a teaching instructor of finance and the director of the GWII Investment Institute. I also have an additional responsibility. I serve as faculty in residence here. All right, so what is the GWII Investment Institute? Many of you know this, but just in case, if you're first time listening to the show or joining us online here, the Institute teaches students how to think about investing and how to invest, principally undergrad and grad students here, and they serve as our analyst and portfolio managers. Our students are managing approximately $8 million of university endowment funds, so these are part of the overall university endowment. And we cover equities, we cover real estate, venture capital, and quantitative investing. We're trying to link students to the industry and to learning by doing, and we do that also by bringing professionals as guest lecturers. And we want to be a platform for our alumni to connect with the school and with our students. All right, just a quick overview of today's agenda. So today we're going to do a little bit of a workshop around semiconductors. We've talked about those before in a previous show of the GWII Investment Institute. So today we're going to do a little bit of check back in on what's happening in the semiconductor world and the semiconductor business. So we're going to quick overview the economy through the lens of semiconductors, just a little bit about that. So COVID increasing demand, supply chain disruptions, inflation. So we'll cover those things. Semiconductor industry, geographic changes. So there are some things happening in the business that I think it's worth knowing about, especially if you're going to invest in these companies or just understand how the business world is working better. A little bit of company and industry news, what's happening on the consolidation front and the capacity increase for semiconductor production in the US. And then if there's time permitting, we'll have a little bit of Q&A. So let's go over the semiconductor business at a very, very high level. This is not intended to be an engineering class, and also by no means is this investment advice of any kind. And so we're not sort of promoting any investment advice. So please do not take it that way. But what are semiconductors? So very simply, this is a product that's somewhere between an insulator and pure conductor that they manage the flow of current. They're typically made of silicon, hence the term Silicon Valley. I'm sure you've heard of that. It's the amount of conductivity that can be changed by adding other materials, impurities, something called doping, sometimes referred to as chips, microchips. I'm sure you've heard about that. It's essential for many products. So in your phone, gaming consoles, medical equipment, cars, almost anything you can think of now, vacuums, you name it, it's in there. And so they're all over the place, pervasive in sort of all of your technology, but then they're getting into things that are even, you think could be more simplified, like a refrigerator, a dishwasher, all those things starting to have chips in them now, especially if they're considered smart appliances. And so it's just, the world is changing pretty rapidly on this front, and it has been over the last several years. And now there's technology and there's computing power being put into all of these things, and principally through semiconductors. The industry has to continue to innovate to keep up with the changes and, and the desires of their customers. People want more computing power, they want smaller, they want cheaper. And so like many other businesses, they have to continue to innovate to stay relevant. So a little bit about the economy through the lens of a semiconductor or semiconductors. So just a couple of check-in on some numbers here to give you an idea of what's been happening over the last several years. So I have a graphic here that's showing the revenue here of worldwide semiconductors since '96, but I want to zero in on the year over year from November 20, which is just towards the end of last year. And you saw a year over year increase from November 20 to 21 of 23.5%. So a big surge in revenues for that. Now, a bunch of that can be driven by things that you can probably guess, which is, demand for products while people are, in COVID situations where they need access to more gear, they need more machines, so all those things have chips in them. And so the demand for products that can help people, work remotely, do school remotely, all the things that started to happen during COVID, these demands translated into underlying demand for semiconductors. And you can see this sharp rise from November 20 to 21. So again, nearly 24%. All right, so this also then created some supply chain issues when you sort of couple the increased demand that some people talk about has been pulled forward a little bit with the fact that some of these things were constrained by being shut down and other factors. There's just a graphic here, a little bit of a graphic plus a survey. And the survey here is saying 83% of the firms surveyed faced disruptions in operations, research and development as a result of coronavirus, primarily due to government closure of facilities. So this is a March 2020 survey by the Semiconductor Industry Association. And two things here: has your company experienced supply chain disruptions? 43% said no, 57% said yes. And then if you had disruptions, what were they? So transportation and logistics, maintenance, gases, chemicals, wafer materials, workforce, all were factors cited. And so, variety of different things happening, but you can see how when demand is high, but the supply chain is constrained, you're getting a situation where people can't get their chips. And that also has consequences. And we'll talk a little bit about that and for different sectors. And if you were trying to get a washing machine, by the way, that was a smart, washing machine, you're probably not getting it. So here's a sector that we've picked out just to demonstrate how this flows through to the specific industry. So you may not think about semiconductors, especially with traditional internal combustion cars, but it's still very important. And there are a lot more chips, a lot more computing power going into these cars. And so this is from the Fed. And so this graph is just showing how domestic auto production in the US dropped to nearly zero in the spring of 2020. And part of the, sort of the idea here is that because they did not have the chips they needed to go into these vehicles, that they could not, have deliveries. And so, or they couldn't produce and deliver. So you may not think, well, how important are these chips? But they're a small dollar value. But if they're needed to run the vehicles, and the vehicle's been built around this, and these companies don't have a way to create a simple workaround, and they can't, re-engineer either the software or the hardware themselves, well, that leads to stoppages in production. And you saw that again in the spring of 2020, very pronounced sharp decrease in the spring of 2020, and then a sharp increase, but a declining production over that time is between 2020 now and the September 21. And again, this could be not only because of semiconductors, but it certainly was a big part of the story, and just demonstrating how important the semiconductor business is to the automobile business. And again, maybe before COVID, you weren't thinking that, okay, this is a weak point in the supply chain for automobiles, but obviously that was demonstrated here, how important the semiconductor business is. And moving forward, I think that has a lot of implications. So now, shifting gears a little bit to inflation, I think a lot of people are paying attention to this. So this is probably not news to you if you've been following the markets or if you're following the business in general. So here's a graphic from the Bureau of Labor Statistics, and it's from 1965 all the way through 2020 to 2021. And you can see that there's been spikes in different times for inflation. In the past, people often talk about, when you talk about inflation, you talk about the 70s and 80s, about being very inflationary periods, and Paul Volcker had to come in and raise interest rates as chair of the Fed at that point. But you had things in the 14% in the year-over-year change in the consumer price index. We haven't really seen much of that. So starting in after Paul Volcker came in and really put a lid on inflation by raising interest rates, you really saw inflation drop dramatically into the mid 80s. And so from the mid 80s all the way through, let's say 2019, you saw a pretty steady trend decline in inflation. And so if you're looking at this graph, but if you're just listening, it's a downward trend starting at like plus 4% year-over-year changes in the CPI all the way through, 2% and a pretty steady decline with a lot of variation in between, but general downward trend. Now, fast forward to 2020, 2021, you're seeing a very sharp increase, 7% in December, if you already saw that. So we haven't seen these types of increases for decades, really. Again, back into the 70s and 80s, and 5.5% without food and energy. And so year-over-year change again for consumer price index and ending in December, 7%. That is really dramatic. Again, you're talking declining from 4 to 2, and now we're up to 7. So that is a very dramatic difference. And this is a reason why people are concerned about inflation. And so what does that mean? Well, it could mean a lot of things. Things get more expensive. It erodes the purchasing power of your investment portfolio, as an example. The things that we work on at the GWII Investment Institute. How does it affect the purchasing power of our payout? Well, this has all implications. And for the kind of things you want to invest in, as you've probably have heard or been told, you want to invest in things that have pricing power to guard against inflation. That's a topic possibly for another day, but just to give an example, inflation, is running high here. So now to connect that with the semiconductor business here's a chart that's demonstrating a little bit of the difference between if you're dependent or you're not dependent on semiconductors. And you can see that there's a pretty significant difference here between these two lines here from Jan 2019 through July 2021. And you saw, pretty consistent, matchup of these lines between Jan 19 and Jan 2021, and then a divergence. And so the average price change has increased more steadily for companies that are, or prices that are manufacturing industries that are dependent on semiconductors. And so that's moving, that has moved past 10%, while the other has gone up, but not as dramatically. So if you're not dependent, it's moved over 5%, but not yet 10%. While if you are dependent, it has gone past 5%, way past 5%, past 10%, and it's on its way to 15%. So this is just something to think about. So these companies that are dependent on these are seeing that the average price change is going up pretty dramatically for them in a very short period of time. And so this has implications. Again, where is that cost going to be borne by? Is it going to be the producer, the manufacturer, or are they going to try to pass this along to consumers, the people that are buying from them? Can they? And if they can do that, they can preserve their margins. But if they can't, then and they can't pass along those price increases, that's going to hurt their bottom line. So that takes it right out of their margin. So that puts a lot of pressure on the businesses. So again, this is specific to the semiconductor business, but you can see how inflation can be a problem. All right, a little bit more about the semiconductor industry here. And so let's get into some geographic changes. So the global semiconductor market share by major country here is what we're looking at. And again, if you're just listening, I'll do my best to describe these graphics. But the market share is really dominated by the U.S. And this graphic is from the Semiconductor Industry Association, thanks to them. And you can see how the U.S. is nearly 50%. It's come off a little bit. But it's obviously a big player in the semiconductor business. Japan has in 03 was 30%. Now it's down under 10%, so it's become less relevant over time. But places like Europe are so very relevant. Korea, Taiwan, China has grown, and China has grown considerably. So you're really talking about China here is one that has gone from almost nothing. And now is approaching 20%, and with a compound annual growth rate of 20 to 30% over the last just few years. And so you're talking 30% into 2024, and so a very dramatic increase again, the growth of China. And so again, going from near zero to being 20% of the overall market, with rapid growth from really 19 into forecasted 2024. Again, the U.S. remains a dominant player. Korea remains a significant player at the, starting sort of a little bit less than 10% in 03, and now is 20% of the market as well. And so also a big player. So really, when you think about the sort of the three dominant players right now, you're talking about the US, you're talking about Korea, and you're talking about China now. Not that the others aren't significant players, they are, but certainly those would be the big three when you think about the market share. All right, so now we talk about foundries. So these are the companies that make the chips, and we'll talk a little bit about where they're from. So foundries, the people that produce the chips. So Apple doesn't produce their own chips as an example. Taiwan Semiconductor produces a lot of their chips. So that's the fab, the fabricator or the foundry where they produce that. In Taiwan Semiconductor, that's how they started their business. They only produce chips for other people. They don't compete with their clients. And so Apple designs a chip and uses ARM architecture, then designs their chip. And then Taiwan Semiconductor produces that for them in their fabrication facilities. And just to give you an idea how concentrated the fabrication is, Taiwan Semiconductor is 54% of fabrication. So really consolidated business, followed by Samsung at 17%. So really the top two really dominate here. It's Taiwan Semiconductor and Samsung. Geographically based, Taiwan Semiconductor is in Taiwan and Samsung is in South Korea. So a really high concentration in Asia and really within two countries. And then UMC, which is also in Taiwan, is number 3 here at 7%, and Global Foundries, which is a US-based company, at 7%. So again, you can see the high degree of consolidation here. Taiwan, South Korea, Taiwan, and the US sort of the top 4 there. And then, China starts to come in at the top 5 with SMIC at 5%. And so, again, the shifting landscape is happening. China is becoming a more, important player in this. And so we'll have to see how that turns out. But you can see right now, very much dominated on the fabrication side by Taiwan Semiconductor and Samsung. All right, so a little bit about sort of the company industry news here. So we mentioned a little bit earlier about consolidation. And so I think this is important, and it's hard to really read where regulation might go here. It's affecting one of these, which I'll mention. But a little bit about the consolidation. AMD, which you might have heard of, acquired Xilinx. The deal announced in October of 2020. All-stock transaction at $35 billion, and it was delayed by regulatory review, but it's now expected to close early sometime this year. Another one that was very significant, and I'll just say a few things about this one, NVIDIA is acquiring ARM. Many of you might have heard about this. We've talked about this one before. The deal was announced in September of 2020, so now we're sort of 18 months past here. The deal was valued at $40 billion in cash and stock. And now it's delayed by a pretty intensive regulatory review. This has to go through 4 different sets of regulators, the UK, US, Japan, and China. And so, just number one, that's a lot of jurisdictions to, have review this deal. And there's also a lot of concern from different companies. The UK has mentioned that they don't want to, lose sort of their flagship, one of their flagship technology companies, ARM's based in the UK. And we'll have to see how this plays out. So a lot of companies who might be considered competitors in some categories with NVIDIA use ARM architecture. So you can think of companies like Apple that use ARM designs, which I mentioned before. They license an ARM design to build their chips on. Now, what does it mean if NVIDIA owns that? Maybe that makes them a little bit less comfortable, but certainly there's consternation within the business. Does this transaction, create some sort of, really anti-competitive setup or really, it slows the business down in some way, or it becomes difficult for companies to access the types of technologies that they need to grow and innovate. And so this has been held up. It looks like this deal may not get done at this point. We're again, at the end of the 3rd quarter here, we're going to be approaching where we'll be at 2 years, and so certainly it's not swimming along here without any back currents, and so very difficult to predict exactly what will happen here. But this transaction doesn't look like it's going to happen. But these are 2 dominant players in the business, and again, just demonstrating the importance of the semiconductor business. Analog Devices here, last one on this page, acquired Maxim Integrated Products. Merger completed in August 2021. All stock transaction valued at $20 billion. This is obviously not a comprehensive list here, but it just gives you some idea about the business is consolidating. There are obviously new companies coming online all the time, but it's really dominated by the big players. One of the reasons is the capital intensity of, let's say, the foundry business. It's very difficult for people to come into that business. So if you're going to say I'm going to actually produce the chips, that takes time, expertise to do that. It's not, you need obviously a lot of money, but not just money is not going to get you there. Building 3-nanometer chips, even if you had all the money, doesn't mean you're going to be able to get it done. And so that obviously has some implications for what the forward looks like. And a company like Intel, which does both fabrication and design in-house under one umbrella, which is a little bit different than we talked about on the fabrication only setups, has made a big push into adding additional capacity, offering actually foundry type businesses to customers such as, which they've announced, Amazon Web Services and Qualcomm as an example. And so that's changing this landscape as well. All right, so a little bit here on the increasing the capacity in the US. And so what's happening? And so again, the US has always been a big player here, but a lot of the manufacturing has gone offshore, and a lot of that has gone into Asia. And so here, we're talking about the global capital spending on semiconductors by region, and then just a little bit about the increasing capacity in the US. And so Samsung is putting $17 billion into a factory in Texas. Intel, $20 billion on 2 plants in Arizona, $3.5 billion expansion in New Mexico. Taiwan Semiconductor, $12 billion plant in Phoenix, and Texas Instruments, $30 billion plant in Texas. So Southwest is getting a lot of love here for sure of the US, but you can see those are big dollars, and those are real dollars going into this. And so real capacity being added, and not just US companies, Samsung, Taiwan Semiconductor as well, putting a lot of money to work in this space. So just a small graphic here about sort of these changes and where this money's going. And so Asia still, a lot of the money is going into Asia. And so the CapEx spending on semiconductors from 2019 to 2021, you're talking about 100 billion overall, going up to nearly 150 billion. And Asia is growing. Asia is growing at 30% over that period. But you're also seeing how Europe, Middle East, and Africa growing by 44% over that time period, and now the US growing at 52%. So the mix is starting to change. Asia continues to be a dominant place for CapEx on this, and a dominant place for manufacturing, and likely that's going to continue to be the case. But you're definitely starting to see how, especially because you had supply chain issues, people are trying to mix up their supply chains and be more diverse. And so you're now seeing Europe, again, plus 44%, the Americas plus 52%. And so that mix is changing, and people are trying to make their supply chains, more resilient over time. Just a little bit more about increased capacity in the US. Global Foundries, it IPO'd, if you're following the markets, at the end of last year, October 2021. It supplies silicon wafers to customers like Qualcomm, AMD, Samsung. It has factories Singapore, EU, US. It was created from a spinoff from AMD back in 2009. Not yet profitable. The Mubadala, investment company, which is part of the Abu Dhabi Investment Authority, retains 89% of the shares here after the IPO. So still a big investor. All right, so these are the sources, just so everybody knows. We cited them here. And now I think we'll get into Q&A. Now we have just about 5 minutes for questions. So if you have any questions, send them in. All right, so first question here. Some analysts have postulated that China wants a fabrication to move away from Taiwan. And so, is there going to be some sort of military intervention here? And does this create a geopolitical situation? And will this affect the semiconductor fabrication industry concentration? It seems like the answer is yes, pretty straightforward, right? And so, China has been much more aggressive, as we saw the charts on being, bigger part of the semiconductor business. They're trying to produce those high-tech chips in China. It's proven more difficult than they expected. Taiwan Semiconductor is the leader in that. And obviously, probably all of us know about the tensions between mainland China and Taiwan. And so, how that ends up resolving itself is unknown. But I think, what you're seeing from these investments into other places, like the US, like Europe, big dollars being spent putting facilities in other parts of the world outside of Taiwan, and really even just outside of Asia as well, I think is a direct result of these tensions that you're seeing between, or that's at least a piece of it, between China and Taiwan. Again, how that resolves itself, we won't necessarily know, but companies are obviously trying to de-risk themselves for any eventuality, and making sure that, okay, we're diversifying our supply chains. And I think that's at least in part a big push for putting plants in the US. Thanks for the question. Any other questions? Okay. So maybe just touch on a little bit of inflation here. So, really it's hard to know what's going to happen with inflation. If this continues to be the case, and how does that impact semiconductors, is the question here, is around, it depends, obviously, like anything else. But one of the, items that I mentioned early in the conversation here is, if you have pricing power, then you're going to be able to raise prices. And so if we have an inflationary environment and the Fed is really raising rates to try to stamp down that inflation, what are the companies that are going to do well? Well, if you're a semiconductor business where you have the ability to raise prices and the people who want your products are willing to pay those prices, then you're going to be able to pass on that. So as an example, if your chips go into automobiles and they're only a small fraction of the price, but they're a big part of the value creation, let's say, then a small change, 5, 10, even 15% change in that one input doesn't have a dramatic increase in the overall price of the vehicle, but you're able to protect your margins because you can raise prices because, in this case, you saw these automobile manufacturers clearly needed that to ship. And so you have some pricing power there. And if you have pricing power, otherwise, people want your chips, you're the most innovative. For example, NVIDIA has been well known to be one of the leaders for GPUs, which people are using for machine learning, and that there's a lot of applications for that. And so if we do have inflationary periods and really you're the lead in this area and people are willing to pay up, well, you're going to be protected on that. Now, if you're fabricating, obviously, input materials are going to be important. So it will affect different groups differently. But if you have the ability to pass on those price increases, then you're going to be able to protect your margins. And so Taiwan Semiconductor, for example, controls a lot of the capacity of the market. Very likely they're going to be able to pass on at least some of their costs, but not guaranteed. But again, you want pricing power, and you want to stick with companies that have pricing power during inflationary periods. Okay, next question. This is probably the last one. You got just 2 minutes left. Do you think major chip companies, consumers like Tesla, Apple, and Microsoft will attempt vertical integration in the semiconductor industry? That's a great question. I'll start with Apple here, and then Tesla and Microsoft. So you're already starting to see this. So Apple, full vertical integration, difficult to say. I'm not sure they would want to go into the fab business, but you can see when they said, okay, we're going to end a partnership with Intel, we're designing our own chips, so the M1 chips and the M+ chips and the expected M2 chips that they put into their laptops and now will likely go into PCs. Those are internally designed chips. So they're using ARM architecture, but they're Apple designed chips. Whether they continue on that path for vertical integration, I don't know, but they're clearly spending a lot of money on the design of the chips and vertically integrating more of it, right? So it, again, was reliant on Intel and now bringing that all in-house. Will they make the next step for fabrication? Tough to know. Taiwan Semiconductor has been a very reliable partner. Anything's possible. Apple has a lot of cash on the balance sheet. Tesla, Tesla's done something similar. So they were using for their self-driving chips, they were using NVIDIA's chips, and they built their own chips. So they hired a team actually away from Apple. They used to be at PA Semiconductor, and then they built their full self-driving chips in-house. And Samsung is the fabricator there. So do they extend that and do vertical integration for fabrication. Hard to know. That's again a super expensive business and very technical, just that aspect of it. But they're obviously vertically integrating more of the business. Microsoft has announced that they're starting to design some of their own chips, and again, whether they then get into fabrication, I think is difficult to say. But you're definitely seeing that more companies are taking more vertical integration under consideration, and some are clearly doing it. Tesla, Apple, Microsoft, all are doing it in some way. Whether they fully integrate for semiconductors, I would say very difficult to say. I think they'll look to other fabricators to actually do the fabrication, and especially if you have another alternative where Intel now is saying that they're going to be opening up their fabrication facilities to third parties, and they announced Qualcomm and AWS as their first two big customers there. And so because it's so cap intensive and so technically oriented, I think that piece of it is probably likely to stay on the outside, at least for now. Great question. We're at 7:01, so I just want to say thanks to everybody. Mark your calendars. The next show live with Rodney Lake for the GW Investment Institute, February 17th at 6:30, and then March 17th at 6:30 as well. Third Thursdays. Hope to see everybody there. Thanks for joining. Look forward to seeing you at the next show, February 17th at 6:30. Our email, invest@gwu.edu. Follow us at the website, LinkedIn, Twitter. Hope everybody stays tuned and stays connected. Thanks for joining tonight, everybody.